Good morning, ladies and gentlemen, and welcome to the Tortilla Mexican Grill PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so on the Investor Meet Company platform. Before we begin, we would just like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the executive management team from Tortilla Mexican Grill PLC. Andy, good morning, sir.
Good morning. Yeah, thank you for the welcome, and welcome everyone to the interim results for 2025. I'm joined here with Josie today, who'll do a quick intro in a minute. But yeah, just as a quick one on myself, I've been the CEO now for about 18 months. I've been with Tortilla now for over 8 years, so you can imagine I've eaten a lot of burritos in that time. I love the brand, I love the cuisine. I started my life as an accountant back in the day in a Big Four firm. So yeah, that's myself, and then I'll leave you with Josie.
Yeah, I'm Josie. I've been with the business now for 3 years and just recently started in the interim CFO position. I'm also a qualified chartered accountant and started my career at the Big Four back in New Zealand. Hospitality is in my blood. My parents run a hospitality franchise business in New Zealand, so it's always been a very important part of my life. So I'm happy to be here with you today.
Great, so we're going to proceed with this agenda. So I'll do a quick summary, followed by strategic and operational review. Then I'll hand over to Josie to run us through some financials, and then we'll try and leave plenty of time for Q&A at the end. So yeah, I guess it's not just 6 months now, being we're in September. We've had a year of significant progress in 2025, which is great, which is much the same as what we reported last time. So, I mean, look at some of the highlights are fantastic. I mean, against the backdrop of a difficult UK market, we've performed extremely well during that time, which we'll talk much more about. We've outperformed the industry by about 8 percentage points in the first half of the year. Delighted to say 6 of the French sites are converted by early October. They're all now, of those 6 are all now done actually, so all trading. We grew our franchise estate substantially as well in the year, and so that revenue stream now is worth a significant amount to us in terms of total system sales. So we're going to cover that off a bit later, and we've signed a pilot with a business called Growth Kitchen, which we're really excited about. We've improved our staff retention and engagement. I'll tell you a lot more about that. We've talked a lot about people in the past, which is important to myself and the team. We've worked really hard on our food, product launches, our brand, our tech. So I'll tell you all about that in the presentation as well. And yeah, delighted that over half of our sites now have got self-ordering kiosks in, which we continue to see some really good upside on as well. So some really good headlines for us to deep dive into in a minute. So I guess just to remind everyone, when I started as the CEO, we devised the vital 5 strategic pillars for us, our sort of strategy, if you like. The 5 areas were to improve our UK profitability, to drive our brand through investing in food and brand to drive top line growth, investing in the team and technology, which is a key priority in a very people heavy business. And actually technology has been something that's been a wonderful addition to our organisation. Doubling down on our franchising was a key priority, and to develop the brand internationally, which we have obviously begun that journey on with the acquisition that we made last year. So we'll walk through these 5 areas over the course of the next 20 minutes. So if we look at UK profitability firstly, it's a really impressive story actually, and I'm very proud of the team for how hard we've worked to get to this point. If you look at where we launched this strategy back in March 2024, which is identified on the graph, since then the red line represents our sales, our like-for-like sales growth, and it's gone from strength to strength. And as you can see, really since September of last year, we've outperformed the industry tracker quite substantially, which is fantastic. And that shows no sign of slowing. and in September as well, which we'll come on to current trading. We've had a very strong Q3, which we're really pleased with. And as you can see, the industry data is somewhat more challenging. The industry's had a difficult year this year, so I think it's even more impressive that we've been able to perform so well in that environment. So yeah, I mean, I guess what that's led to, which is a fantastic achievement, is a year of record UK profitability. So year on year, our profit increased by more than 30% in the first half of the year, which is fantastic. And we'll deliver record profit margins, both from a pound and percentage perspective this year, which is fantastic. And yeah, I guess it really nods to all of the efforts across the vital 5 areas, which are going to come on to. And actually one other area as well, which we're focusing on, is looking at our estate. We have a small sort of single digit number of stores which are loss making, which we are going to try and address. We've addressed a couple of those already. We've closed 2 units this year. And I think actually when we do that, we can get our store EBITDA margins back. Well, not back, because we've never been at that level, but close to the 20% level, which has been the traditional milestone that people have aimed for in this industry. So yeah, really pleased with this, and lots of things for us all to be really excited about. And I guess this slide sort of covers that point in a bit more detail. And actually one of the things we wanted to look at here is, if you look to 2019, actually, pre-COVID, we've increased our adjusted EBITDA. So this is our EBITDA, store EBITDA, plus your franchise income, less your head office cost. We've increased that from 7.2% to 10%. And I think a few years ago, we identified that 10% was our aspirational target in the short term on that. So that's a great result. And actually, when you look at since 2019, the amount of capital we've invested in the business through either expansion capital, whether that's adding new stores or the acquisition of Chilango, and then the EBITDA less the maintenance costs growth that we've seen over that same 5-year period, we've delivered a 24% ROCE during that time, which I think is a great result, actually, considering that we entered into some smaller towns across the UK where the brand awareness was lower. We're going to talk a bit more about that later in the presentation, how those sites are maturing. So I think that's a pretty reasonable return on capital, actually. And I think once we rationalise the estate, as I mentioned, with a small number of units, that ROCE will look really, really good. And so, yeah, on the right-hand side, you can see corporate margin post-maintenance CapEx. So, yeah, it's a really fantastic news story of where we are now this year. So I just wanted to talk a bit about what's driven the top line. I guess that's really fundamentally the thing that's driven that profitability. It's always great when you can generate sales growth through your core estate rather than necessarily adding new sites to drive growth. And that's, I guess, been our mission. We've been really focused on how do we drive volume. We want more people eating burritos. So we'll talk a bit more about volume later on. But essentially, the main things that we've done is we've improved our core menu quite significantly, as we talked about before, whether that's quality of ingredients, cooking methods, or recipes. And our food is really substantially better than it used to be. And there's still some exciting stuff being trialed at the moment that will come live in the coming weeks. So really excited about those changes. We've also jumped on to sort of seasonal menu rollouts. So we launched a summer salad to compete with what was quite a big growing food trend in the UK at the time of the year where you're meeting the customer with what they want. And that was really successful, huge growth on that year on year. We innovated with a new product, our protein pots, which drove some substantial sales. So that's about my point about, you don't necessarily need to add sites to grow your business when you've got products that you can bring to the market to drive sales growth. And they were really well received. Everyone can see when you walk around the supermarkets that there's a lot of protein badges on food now. It's a big trend. We jumped on that, and I think we're really able to capitalize on that food trend. And we've been doing some limited time offers, which have been really well received. We had one with Sauce Shop, which is coming next week. And we've worked with Tubby Tom's. We've worked with a ton of different businesses, and it just creates some buzz that people get excited about. And we will continue to do that. So then moving on to some of the work we've done on our brand as well. The imagery you can see on here, it looks very different to our tone of voice and our imagery of a year ago, really. We've worked incredibly hard to create a really bold and consistent storytelling and really heroing the food. I think this, as these pictures go to show, the food looks vibrant, it looks fresh. And I think the message is just really clear and concise, and it's consistent across all customer touch points as well, whether that's on the loyalty app, whether it's on our website, whether or not it's on social media. And actually, we'll talk about this later in the presentation. This is the way that we've designed our stores in France as well. So people will see this brand show up equally across all areas. And yeah, we think it looks great and a lot more modern, I guess, than what we had before. So yeah, just to sort of talk a bit more about some of the things that we've done on the marketing side as well, around building community as well. We've done some strategic partnerships. We work with Jab, where we did fun work at their gym, which is a boxing thing. Big reach on that. We've done some supper clubs, and we've done, as you can see here, we did a guac bar a couple of weeks ago in the National Avocado Week. And yeah, it's been really fun. We've been working with social media, so we've created quite a lot of hype around the brand, and I think that's only going to be something that continues to build. And then, yeah, looking at a few other areas, the picture on the left is the store. So this is something we'll cover a bit more later on. The store, that's a location in France that we've built. It's a lot cleaner, sharper, simple design than what we have in the UK at the moment. And we're really proud of the work and effort that we invested in that brand. Our digital platform looks very different, and we've enhanced, our Burrito Society application. And I think we've had some good traction through that, which we'll come on to. Our packaging looks better. And our staff uniform, people have been really excited to wear a more sort of interesting, fresher looking uniform. And I think that whole interaction the customer has across all those touch points does make it nice and consistent. So yeah, talking about team, this is something that's hugely important, and I think sometimes is often overlooked. I've talked about it a lot before. It means a lot to our organisation. We have a lot of employees, and those employees, if they're motivated and the morale is high, they are likely to give the customer a great experience. And so I think, other than the food, the customer service is something that can really make or break somebody's experience of any business. So that's why we've invested hard in it. We've seen our new manager retention up 7 points, which is fantastic. And we've been promoting internally through the centres of excellence that we have. We talked before about the Habanero Highway in a previous presentation. This is a career pathway that we built for our team members. You can see there's various graduations here on the slide, which is fantastic. And that's created improved skill set within the organisation, and the training team have done a fantastic job with that. And the other thing just to highlight in here is we implemented our Burrito Masters competition last year for the first time. We're doing it again in a couple of weeks. And this is a bit of fun, but it's each restaurant, we identify the best burrito roller in each restaurant, and then we do regional heats where we find the best in the region, and we've got a national competition. Well, I should say international competition, because we've got the best from France and the best from Dubai coming over as well, to really sort of celebrate the fact that we're a global business now. So yeah, lots of fun to be had with these things, and it's definitely something that's added to morale and the feeling in the organisation and the growth. Very quickly on customer service as well, we've implemented a new feedback tool to have a little bit more precision, I think, in the types of reporting we see of what customers are saying. And a couple of themes that came out of that, a recent deep dive on that was portion size and value for money. And since really doubling down on portion size, we've been able to improve the negative feedback on that quite substantially. And so this goes to show you can kind of use data to act quickly. You can jump on trends that are coming up, and that's something that our operations team have been very focused on recently, and yeah, will continue to be a big focus. And then on technology, this has been an area that we're we've been really focused on really since the launch of the Vital 5. It's been fantastic that we've managed to implement so many kiosk sites in such a short period. Over half of our estate in the UK now has kiosk sites. Where it's possible to put them in, we would intend to put them in pretty much everywhere, because we see a substantial improvement for some customers in the customer journey who feel perhaps a little bit nervous with the fact you get lots of questions at the line and they find it perhaps a little bit intense. It creates a sort of more of a calm process for those individuals. But we've worked really hard to do it in a way that doesn't detract from those that do want to come to the line and order in the traditional way. So getting the customer journey right in terms of where you position them, the signage, we've put a lot of effort into making that a good customer journey, and yeah, fantastic sort of returns that we see on those kiosks, both in terms of transaction volume growth and average order value as well. The Burrito Society continues to be a fantastic success. We're at nearly 250,000 members now, which is fantastic. The app looks great. It's got the new design, as I said, the new branding, and yeah, we continue to work hard to encourage our customers to come quite regularly. We don't ever really want to discount our in-store products. So we're trying to provide value for our loyal customers by rewarding that loyalty. They get a free burrito after they've ordered 5. We're continuing to evolve and explore potential robotics partnership with Kaikaku, which we talked about before, which is fantastic. And we've been working on our data warehousing and how we use information to make quick decisions. I think we're all agreed that the world has moved on very rapidly over the last year or so in the world of AI, and it's fantastic when you can get to the bottom of questions and decisions and analysis more quickly by using the tools that are now available in the marketplace. So we talked before as well onto the other pillar around doubling down on franchise, and this is an area that I think the graph is fairly indicative that we have doubled down on franchising over the last 5 years. It's been a big thing for us. Just to remind, to tell those of you that are not so familiar with our business, but we have a really strong, effective operating model for franchising. We have slow-cooked meats and beans that are cooked in the central kitchen, and that creates a really fantastic, consistent product. And a lot of those cooking processes benefit from slower cooking times, which is more easily achieved in a central kitchen. But then what we do at the store level is much more simple, because we just have to prepare some fresh salsas, which is super simple. So it means we can build sites without extraction and complicated, expensive kitchens. We don't need chefs. And so it's a very nice model for our franchisees, where they receive the food from us and then they just do the small bits of preparation themselves on site. SSP have been growing fantastically with us. We're looking at some opportunities with Compass as well. I mean, SSP, just to talk about that business, we've opened a number of stores recently, airports, train stations, and they're in double-digit like-for-like growth in the first half of the year with us, which is fantastic. Compass, we're looking at some other sectors as well. That's a relationship which is going well. And then Ethos, again, even bigger like-for-like growth. It's fantastic, the job that the team have done there, and they've opened some sites this year, and there'll be one more later on in this year as well in Dubai Mall, which should be fantastic. So yeah, we're looking at some other opportunities. I mentioned earlier we signed a pilot with Growth Kitchen, which will be exciting. So there'll be 3 sites over the next few months. We've just opened with SSP in Glasgow Central train station. The site looks fantastic to the new brand design guidelines. And we're actively progressing discussions with some European partners now that we've got the springboard for growth in Europe through our big kitchen in Lille, which I'll come on to. We're sort of actively working on that as well. So yeah, talking about then, it's a good segue into developing the brand internationally. I mean, this is ultimately why we bought Fresh Burritos. It wasn't to do a corporate rollout of our own stores, but it was to create a platform for growth in Europe. So we bought a business with 13 of our own stores, and they're in fantastic locations like Gare du Nord railway station, probably one of the best units in the busiest railway station in Europe. That's fantastic. So we've got a great property portfolio over there, which we're busy converting. And as I said earlier, we've now converted 6 of those locations. Still early days, but some really encouraging signs coming out of that, and we'll look forward to talking more about that sort of later in the year when we've got some more information. We've got a team in place led by Gilles, and we're really motivated, and we've built the central kitchen as well, which has been in operation now for some time. Huge facilities, 3 times as large as the UK one, which obviously supplies about 100 restaurants. So we've got a facility there that can supply a lot of restaurants, and obviously the plan for us then is to franchise our brand in various countries close to France, so France, Belgium, Netherlands, Germany. We're also looking at opportunities in Spain as well, and Portugal. So there's a lot of white space opportunity in Europe, and I guess that's why we made that strategic acquisition in the first place, and we've been in the investment phase there. So this is some imagery of some of the stores that we've converted in France. I hope you agree that it looks a lot more modern and fresh, and a sort of cleaner design. And we're really pleased with it. It has meant that we took a bit longer to convert the sites, but we feel that you have one chance to enter a new market, and you've got to do it well. And so I think what we have done here is, it has taken us a bit long, but we have done a good job of it. The sites look great, and we're really excited about the opportunity. So there's various, and the site on the left is Val d'Europe, one in the middle is Lille. So look, they look great. The outside looks great. The inside looks great. And I think it's going to be a good opportunity for us to really showcase the brand in a new market. And then, just to cover off a bit of a store table before I hand over to Josie on the financials. We're now at 116 sites at the end of September, which is fantastic. We're by far the largest in Europe. There's no business selling burritos that's anywhere near our size, which is great. Gives us a good strategic advantage. And we've got a good mix of countries, franchise stores, own stores. And as I said earlier, the focus at the moment in the UK at least is to continue on the journey to drive volume and profitability in the UK business. And we'll look at expansion opportunities in years to come. But I think there's enough to go at in the UK in terms of that side of things. And then with Europe, the opportunity is obviously fantastic. There's lots of countries, lots of great shopping centres, lots of great train stations, lots of high footfall locations that we feel really confident that the brand will perform well in. And so, as you can see from here, this is a sort of a good reconciliation of the existing estate. So over to Josie now to run us through some of the financials.
Great. I'll just hold this so I can flip the slides as well. Great, so thank you, Andy. I'll start with some of the financial highlights, which I think really confirm the progress that we've made in the UK this year, as well as the progress towards our European expansion strategy. So firstly, the UK sales like-for-like growth was 5% over H1. Which Andy mentioned was significantly ahead of the market. Our revenue was 36 million for H1, which was just over a 14% increase year on year. System sales reached 50 million, which is fantastic to see. That's including our franchise sales as well. Overall, our adjusted EBITDA reduced as a result of the investment phase in France, but importantly, the UK adjusted EBITDA increased over 30% to 2.4 million, which I'll speak to later in the slides. Great, so taking a look at the income statement, I will speak to revenue and adjusted EBITDA further down. I've got some waterfall graphs which I can take you through. But looking at our gross profit margin increased to 27.7 million, which importantly, the UK margin actually increased to 78.3% year on year. Despite inflationary pressures, we had strong supplier negotiations. I think it's important to highlight that beef prices have increased significantly in the market this year, which we haven't been exposed to due to a hedge that we completed at the beginning of the year. So that's really where that margin improvement has come through. Overall, we did have a loss before tax, which we view as a near-term consequence of the investment phase in France. This was largely driven by France, 2 million, with a smaller loss in the UK. Great. So I think, this really demonstrates the strong like-for-like sales performance that we've had across the UK this year. As Andy mentioned, we've been really focused on really squeezing our existing estate, which is really the best way we can grow our sales. Some of the initiatives mentioned was our protein pots, which is generating sort of 12k a week in additional sales without any capital outlay, which is a great example of how we can grow our sales without significant capital. Overall, as Andy mentioned, for H1, we outperformed the market by over 8%, which is just fantastic to see. And that's continued into Q3, and we're expecting Q4 to be strong as well. Fantastic. Great. So as Andy mentioned, we do have a short tail, which are largely in our regional sites, where we opened quite a few sites across 22 and 23. I think this graph is fantastic to show that despite us opening the sites in more regional areas with lower brand and lower product and cuisine awareness, we're actually seeing really strong sales like performance across these sites now. And with that short tail and the sort of low single digits, if we were to remove that, then this performance would be even stronger in those regional areas, which is just fantastic to see. Great. So this waterfall graph just shows our revenue growth from H1 last year to H1 this year, which is a record, as I mentioned earlier. A significant portion of that is due to the French acquisition, but also our growth in our franchise income, where we've opened a couple of sites over H1. Our UK sales like-for-like growth as well. So really a good acknowledgement of UK growth, whilst also acknowledging our UK's international expansion strategy. On the next slide here. This is also another waterfall graph, which just shows how we got from our H1 EBITDA last year to EBITDA in H1 this year. Again, a significant portion of that reduction is due to France, which we view as a near-term impact of being in our French investment phase. The first arrow points out that actually our UK adjusted EBITDA increased over 30%. To 2.4 million for H1, which is just great to see, mainly driven by our top line. As Andy mentioned, we've got the initiatives from the like-for-like sales growth, as well as some cost savings, which really show our focus on ensuring that we're optimizing costs as well as growing that top line. Great, so moving on to cash flow and leverage. So importantly, our mature UK estate continues to deliver stable cash generation, with free cash flow reflecting our investment-led growth strategy. Adjusted EBITDA of 1.2 million there, you can see converted to an operating cash outflow of 1.8 million, which was driven by working capital movements, which was largely timing driven in the UK, as well as our French operational investment. So the free cash outflow of 4 million really reflects our planned investment in the UK, where you can see we've invested in tech, which is our kiosk investment, as well as mainly our French investment expansion. It's worth acknowledging that this free cash outflow reflects being at the early stage of the investment cycle. We've front-loaded the investment spend, as Andy mentioned, with the central production kitchen, as well as the initial conversions, which has temporarily weighed on cash. But the infrastructure is sort of now in place with the heaviest spend behind us, and future rollouts will be much more efficient. In terms of the financing to support the growth, we secured in H1 an additional £2.5 million of refinancing with Santander, of which at H1 we had drawn 1.5 million, with a further million to be drawn in H2 just continue supporting this growth really, which is great. I think then that sort of summarises the financials.
Yeah, so I guess just to summarise, we've got through the presentation quite quickly, so there'll be lots of time for some Q&A. But yeah, I guess what are the headlines and the things we want you to sort of walk away from this knowing? I guess the UK is in a great position, better than ever. So we want that to continue, and that is always at the moment at this stage in the business going to be the kind of the cash generating engine of the organisation to support growth. In terms of outlook, one thing we wanted to highlight on the outlook side of things is that we continue to trade well in the UK. So our like-for-like in the third quarter was 7%, which compares favourably actually to the first half of the year with the 5%. So that's fantastic. And yeah, we've got 6 sites converted. We're going to do one more this year before the end of the year. And then we'll be looking forward to sort of coming back with some information about how they're trading in the coming months towards the end of the year. Great that we hedged, and that does continue, as Josie mentioned, to help us protect our UK profitability in what is quite a volatile sort of food market at the moment from an inflationary point of view. And yeah, franchising growth, we've got, it says there, a couple of sites to open in the second half of the year. One of those is Glasgow, which is now open. The other one will be Dubai Mall later in the year. And then on top of that, there's the 3 pilot locations we're planning with Growth Kitchen as well. So that's really exciting. And so, yeah, I guess we as a board remain really excited about the opportunity. I mean, we are the pan-European winner. We're the largest business selling burritos in Europe. Scale is everything in this industry, and the fact that there's lots of businesses now talking about European expansion. It's great that we're not just talking about it, but we're doing it. We've got the infrastructure built now. We've got the kitchen there, we've got the team there, and we've got some stores designed. And so yeah, we're on that journey, and that's really exciting for us all. That's why we're all here. And I think having then the UK engine room generating the great profits, that's a fantastic sort of combination to mean the business is really going to succeed over the coming years. So yeah, we remain really excited, and hopefully this presentation has helped highlight some of that opportunity for you all as well. So I think there's one more slide. Yeah, I mean, this was the summary, and we coming back to the vital 5. I mean, this does remain the priority. We are going to continue improving UK profitability, and some of those steps we talked about in terms of the initiatives that we've launched this year, having the full year impact of those next year, whether that's disposals we've made of a short tail of sites, or other initiatives like kiosks. They will continue to provide a lot of value in the future. We're going to continue investing in our food and our brand to drive growth. I think there's more opportunity there. So I'm going to work really hard with the team to keep pushing that, because product is absolutely everything in this industry. I'm going to keep investing in the team and technologies we have so far. Talked about franchising, that's already well set up, but we want to go harder at that as well. Now we've got the Lille kitchen built, which ties in with our objective of developing the brand internationally. So yeah, we're all of the view that it's very exciting, and hopefully, as I said, you are as well. So that does take us to the end of the presentation. So there's some questions, I think, which have been submitted. I just realised our camera, is moved. We moved the laptop, unfortunately. So we can run through some questions now. We'll work down the list. So the first one here is a pre-submitted one about how we're capturing the vegan, vegetarian market. Well, I guess the answer to that is we launched a new vegan chili product last year. It's a really, really strong product that's very popular, actually. So it does remain something that we offer. Obviously, you can also get a vegetarian burrito and have the guacamole in it. So we do have a couple of options. But actually, what we're seeing is not a huge growth in the vegetarian vegan market. I think there's other food trends which have sort of grown more quickly, and so like the protein pots and things like that. So whilst it's something that we look at. I guess that's the beauty of having an adaptable menu, is we can cater to that market. So next on the list, can you detail the self-ordering kiosks delivering the strong uplifts and rapid paybacks? Can you quantify the average sales uplift per site, and what proportion of UK sites do you expect to be kiosk enabled by the end of the year? If you're happy to take that one.
Yeah, absolutely. So we are seeing strong like-for-like sales uplift with our kiosk sites, about a 10% sales uplift compared to the sites that don't have kiosks. So we are sort of very focused on continuing to deploy those across the estate. There are some sites where it's not going to be possible to have kiosks installed, sort of shopping centres that won't allow us. But all of the sites that we sort of can install kiosks, and it's on our agenda to do so.
Great. Next one is, what is the restaurant opening strategy? Will you open yourself or prefer franchise? Would definitely be the latter. I guess it depends on the market we're talking about, to be fair. So certainly in Europe, that would be the plan, is a franchise rollout. Of course, we'd always look at opportunities. If a fantastic store came up that we felt we could do ourselves, we could look at it. Certainly in the UK, where we have the operational skill set to operate sites. But when you enter a new country, say somewhere like Germany, it is easier to find franchisees because we don't have the operating infrastructure in that market. We don't know the market from a recruitment point of view, a property point of view. So I think it would be a wise strategy to have a capital light model where we're then also supplying the foods to those businesses, which enables us to utilize the buying power of having that food come through our supply chain. But also we're able to, it has a financial benefit, but then we can control consistency as well, which is super important. I think in the UK, we'll see. I think it's something we're going to keep thinking about as a board and assess perhaps a hybrid model in the future. So the next one we've got here is how to explain the lower like-for-like growth for restaurants opened in 2024 versus the cohort opened in 2022, 2023. Newer restaurants should have higher growth because starting from a lower base. And they do. So yeah, I mean, last year, I can't remember what site we opened last year. Norwich, I think.
Yeah, Norwich. I think when I explained that slide, that 2022, 2023 comparison was to our existing estate, not to the site openings in 2024.
Yeah.
So I might have confused you on that slide. So you are right. The 2022, 2023 are really our newest cohort, and they are outperforming the existing estate in terms of those like-for-like sales.
Yeah. So the question here, how likely is the UK model success to translate to France? Well, it's a brilliant question. I guess we believe very well there are businesses doing what we do in the UK, in France. There's some other organisations, and they're moderately successful doing that. We believe our product is better, and we think our price point is better, and we can leverage our supply chain and processes from the UK and I think synergies from a supply chain point of view. Some of our food comes from Europe anyway, so there's opportunity to consolidate supply chains and benefit from that. In terms of the model success, I mean, what we're seeing in terms of food trends, I guess, is that people want to be able to customize their meal, and our meal is obviously fully customizable. People want healthy food, but they also sometimes want indulgent food. So our proposition ticks both of those boxes. And another trend is obviously the fact that delivery is the key growth area in the industry. And we're very lucky in that our product travels very well, particularly the burritos, which are wrapped obviously in foil. They travel really well. And that's, I think, driven a lot of the growth we've seen in the UK. And I think when you look at the other European markets, you see those same trends as well. So the question around, can you remind us the kitchen capacity in the UK and France? How long do you think it will take to fully utilise these kitchens? Well, in France, certainly many years of opportunity with that. It's 3 times the size of the UK, and the UK facility is supplying around 100 restaurants. It's a good question as to how many the UK facility can supply. I think it depends a little bit in the future around our strategy with, do we want to put additional food items through the central kitchen if we grow our menu? So that's something we are working on, but there's no risk of that running out of capacity. We could open it more days of the week, run more shifts, so there's definitely more space in there for growth in the future. There's another question here around the Lille production facility. We're curious about the capacity of that facility. I mean, a lot more work needs to be done on that, but broadly speaking, I mean, as I said, it's 3 times the size. The UK one is supplying 100 stores, so some quick maths could obviously extrapolate that to a few hundred locations. We need to do some more work on that. Our priority and focus has been very much on growing and the UK profitability and obviously making a success in France. But yeah, there's no sort of issue that facility isn't going to be large enough to support the business. I think that probably the bigger limiting factor when we're exploring other countries is actually the commercial question of whether or not it's better to travel the food shorter distances. You know, if you open up in Portugal, it's not going to make sense to move the food from Lille all that way. So I think each market needs to be looked at on a sort of case-by-case basis in terms of the commercials and the food quality. It's not just about the commercials. We don't operate a frozen supply chain at the moment. It's fresh. So these are all things that we need to play around with and have a think about. So I guess our focus with the unit in Lille was always going to be in the short term, France, Germany, Netherlands, really. They're the locations which it's easiest for us to expand into. And the white space research that we did previously identified those as the markets that would have the greatest immediate potential for us. What is the mix of sale on deliveries and the objective in the long term? Do you want to take that one?
Yeah, so it's about 30% currently, which I think is about the right level for us, really. We are, as I mentioned earlier, really focused on growing our in-store sales. Obviously, there's some margin impact on delivery, but again, it's a really important channel for us, the delivery sales. And we recently changed our delivery strategy to a dual model, which we've mentioned before was a great option for us in terms of improving our profitability. So I think it's, around that 30% mark.
Okay, so there's a question here around UK company-owned stores have declined over the last couple of years, and talks about optimization of the portfolio, which could mean closures. Does Tortilla feel the UK market is saturated for company-owned stores? And then a follow-up thing of, you showed that our franchisees generate more than 20 million in sales, which is great, but wouldn't it be amazing if that was all Tortillas, not simply a royalty? Great question. So I guess looking at the first bit of that, does that mean closures? Probably. We've got a couple of sites which the rent is either too high now. I mean, could be central London ones where, you know, work from home means that you only get 3 days a week from some of those sites now, not 5 days like you used to. But also there are some smaller towns we're in which are a bit of a challenge. So I guess we're going to look at it. As I say, we've got a very small number of stores we're talking about here, but I think it's right if you can extinguish some losses within your organisation with exiting a couple of locations. That feels like one of the key ways to get into that 20% store EBITDA. It definitely doesn't mean the UK is saturated. There are many great shopping centres and high streets that we're not in. What it does mean is we entered a couple of locations that we probably shouldn't have in hindsight, but for a business with as many stores as we have, it's not unreasonable to look at those and address any sort of underperformers. I don't believe the UK is saturated, but I do believe that the franchising strategy is the right one. Although you obviously make more money if you open your own stores, if you've got a 20% store EBITDA model, which as an average, which is a great average to get to, but you can make 5% from a franchisee plus another 3 or 4% on supply chain effectively by leveraging your buying power, and then potentially get a marketing fee as well. You can get to nearly 10% with franchising, which versus 20% where you're not putting any capital down. It's a really appealing model, and it means that you can go faster at growth as well than we could with our own resources. So franchising is absolutely the right strategy for us in Europe. But, where there is opportunity to open a corporate store, a flagship type location, of course we'd look at it. But I think our philosophy at this stage is franchising is the thing that we'll be looking at harder. Is there any outstanding earn-out on former acquisitions? When are the cash out expected? Do you want to answer that one?
Yeah, the answer to that is no. That went out in H1. There was a contingent consideration relating to prior year acquisition, but that's now all been settled. So there's no more future outflows.
Okay. How many restaurants rebranded in France? How many are waiting to be rebranded? So we have 6 corporate stores rebranded now and open trading. A 7th one will open later this year in Gare du Nord railway station, and then the remainder will be next year. And so that's the sort of split. So there's 13 sites in total. So we just over half will be done this year. There's a growth kitchen here for the question is, I vaguely recall Tortilla using ghost kitchens before, but a unit with no physical retail presence, but is active on delivery apps. You later closed these down. So I'm wondering why you are revisiting this approach and why use a third party. Can you address the potential risk on quality and brand equity here? So it's a slightly different model we're going to explore with Growth Kitchen. When we were running the kitchens before, we were running them ourselves. This time we're going to be licensing the use of our brand, but we will be controlling the food in the same way as we do with a franchisee. So it is no different really to a franchise relationship. So obviously we know the guys at Growth Kitchen well. They're good. They're good operators. They've actually got one of our former employees working in their business that knows our business very well. So we feel that we went through the right process to be quite selective on the partners that we look at this model with. And I think it is an interesting model to grow your brand. These are all London locations at this stage, but to kind of saturate some of your delivery areas with some high quality operations that also means that you can get your food to the customer more quickly. So it's a slightly different approach to what we did previously, but we feel confident with the food protection quality and the fact that we know this business very well, that we can protect our brand equity, as you raised in your comment. So just looking down the list, sorry, just trying to read them quite quickly. Follow up on the Lille comments. If the CPU is 3 times the size of the UK and has 100 units, does this imply you can support 200 to 300 units in Europe with a single central kitchen? Yes, essentially it does. I don't have the exact number because we haven't done the full maths of it, but the reason we bought such a substantial unit was to embark on a large franchise rollout in Europe. And I guess ultimately what we're saying is we believe that there is an appetite for this cuisine in Europe. I mean, for example, in Germany, it's in many ways a burrito. It's a wrapped breaded product. I mean, it's full of carbohydrate, protein, it's fresh. So yeah, our view is it doesn't have to be spicy either. A lot of people sometimes think, well, it's not going to, other countries don't like spicy food. Well, burritos don't have to be spicy. They can just be tasty without the spice. So yeah, we do believe there's a big opportunity. And as I say, the limiting factor, I think, for us on Central Kitchen will be more the size of the markets near there rather than the manufacturing capacity of the Central Kitchen. We are also exploring opportunities to perhaps supply business to business as well. From that Central Kitchen, we could do something like that as a food manufacturer. So we're looking at, it's early days. I guess our focus has been on the mission at hand, converting the stores. But yeah, that kitchen is substantial and would be able to support a big size of estate. So the question here on UK and Europe, have you ever considered the United States? Yeah, I mean, it's a very interesting question. Obviously, some brands have come from Europe to the United States. I guess the honest truth is Chipotle have got a massive number of units in the US. They are the hero in that market. You could argue that, there's space for another large player, a bit like you've got in the burger or, chicken markets in the US. There's not just one business doing it. But to be quite honest, I think the obvious priority for us, given that we are the largest in Europe, is to continue cracking on in Europe. You never know with the US, maybe one day, but it's not something we'll jump at immediately. There are other markets that are also interesting, like I say, the Middle East, Saudi, Dubai. I think we've got enough expansion opportunity on our hands at this stage. Question around why we made our Lille facility so large. Surely a waste of money on any reasonable time frame. Well, we got it for a very good price. And actually it was very well fitted out before we even entered the unit. So the truth is we haven't really paid a lot more for a large facility there. In fact, the rent on that facility is lower than our UK facility. And the capex was lower as well than it would have been if we'd developed it from a shell because of the work that the landlord had already done on the unit. So yeah, I take your point. Seems like a bit excessively big, but actually when you look at the commercials, it made a lot of sense for us. Just reading the next one. Company
has gone from 6.7 million net cash in 2021 to 10.7 in 2025. What are the moving parts of this? What is the strategy with respect to cash and how to fund future growth? So that is really reflective of our investment strategy in France, where we have, as I mentioned, we're sort of at the beginning of our investment cycle here, where we've outlaid a lot of capital to acquire our central production kitchen, which Andy mentioned we did get a good price for, as well as the additional capital outlay for the early phase of the conversions. So we're really at the beginning of the cycle here, where we've laid out the capital and we're expecting future returns to come from that.
The question here about essentially how many restaurants does the central kitchen need to break even? The answer is roughly the number that we've got, because one of the reasons we looked for a strategic acquisition was that we wanted to build a central kitchen, and we knew that we needed around about 15 restaurants to enable that facility to kind of cover its costs. So that was part of the rationale for buying a business of the size that we did, to create that stepping stone for our expansion. So yeah, it's sort of roughly of that order. And obviously, from this point onwards, if we can franchise the business in other markets in time, which is the plan, then obviously the kind of unit economics of that kitchen really start to make a lot more sense. But yeah, it's covering its costs at the moment. Just trying to flick through to see if we've missed anything. The level of borrowings is edging closer to the max capacity you have available. Any thoughts on when you would prioritise paying down borrowings? I guess we've never had the intention of being a business carrying a lot of leverage. It's never been our mission, and I think that's still our philosophy, frankly. Obviously, we're at a sort of a more levered position than we have been previously, because we are in that investment phase. But I think it's important to remind ourselves that a lot of that investment has now been done in the central kitchen and the sites that we've built. So we feel like we're in a good place to bring that leverage down in time, particularly as well with having the UK business pumping out some really good numbers. That's going to generate more cash for us in the coming years as well. So yeah, our intention is not to continue to grow our leverage in any way. I think we've covered most of them. How do you develop in the Middle East? Sorry, we missed that one. Where are the kitchens for this market? So actually in the Middle East, they use one of their restaurants to produce some of the food for the others, but actually they do produce more of their food on site, which is a model that the UK business used to use, obviously, back at the start. It does work well as well. I mean, ultimately, the food is relatively easy to produce, whether it's in a central kitchen or the store. It's just, for us, it makes a lot of sense at our scale to produce en masse in a central kitchen, because we can control the quality. But I have to say that the guys in the Middle East, they do a fantastic job of retaining food quality. In fact, their operation is extremely good. We have one of our former operators over there as their sort of key the ops director. So it's a model that works well, and they can control their food quality really well. And there's actually not that many adaptations for the menu over there as well. It's quite similar to our kind of UK model. There's a question about the term of the franchise, royalties, flat fees. I guess terms, I mean, for example, development agreement with SSP is a 5-year agreement that we've got as an example. And then usually with that, there's an exclusivity in whichever market. There can be an exclusivity, and in exchange, a commitment from the franchisee to open stores. So that's the traditional model we've used. The franchise fees vary depending on the partner. Obviously, I wouldn't want to kind of commercially say what they are for each partner, but they're sort of the typical level that you see in the industry. And as I say, the other advantage that we have is ultimately, as we're supplying businesses outside of our own organisation with food, it means the cost to serve a lot of our own stores in the UK is brought down because there's just efficiencies in costs from supplying external businesses as well. And on top of that, we can then everyone benefits from our increased buying power on product lines like the chicken and the beef and avocados. As you can imagine, we're one of the largest buyers of avocados in the UK. And so it's great because we've got that buying power that we can then pass that on to our franchisees as well, and they can generate some good returns also. So I think we're pretty much at the end of the presentation. I think we've done all of the questions from what I can see as well. So we can probably wrap up, I think, at that stage if we want to hand back.
Perfect, guys. That's great. And thank you very much for your presentation and for being so generous with your time and addressing all of those questions that came in for investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you after the presentation just for you to review. But Andy, perhaps before really now just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments just to wrap up with, that'd be great.
Yeah, no, absolutely. Well, hopefully we've conveyed the key messages this year. I guess the key takeaway is record year in the UK at odds with, I guess, the sector that struggled this year. So that's fantastic and a testament to the hard work of the team, and that will continue. And we've made progress in France. We'll have 7 sites open by the end of the year. We've got 6 of them already. So it's fantastic. Yes, it's taken us a bit longer to get there, but actually the designs look fantastic as a result of that, and I think it was important to get that right when entering a new market. So yeah, we're really excited, and I guess as we've talked quite a lot about the central kitchen, hopefully investors can see that this is a strategic acquisition that we made to provide the springboard for a lot of future growth. So hopefully everyone's as excited as we are and the board are about that opportunity as well. So yeah, that's really the key messages from us today.
That's great. Andy, Josie, thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Tortilla Mexican Grill PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.